Hello and welcome to Money Control. Hi, this is Nikki. We're in conversation with the Managing Director of Shree Cement, HM Bangur. Hello and welcome to Money Control. So I'm going to start off by asking you about your Q1 performance, where there is a realization improvement clearly that we've seen, but that has been offset by the cost pressures. With that, what can be expected going forward in the second quarter of the financial year? Do you think your EBITDA per ton can go lower than 1,000 rupees per ton kind of number that we've seen in this quarter?
Uh, the price pressure, cost pressure is very high. It is because of international coal prices, fuel prices, everything, the diesel, all type of liquid prices have increased internationally. They are now softening, and how much it will soften? Suddenly, we will find that Europe is buying coal, unlike the past period. New things may happen. So anything to predict about the future will be difficult. But yes, in all likelihood, the margin should be maintained. And about 1 month of the new quarter has come, we think there should not be any problem to maintain the margin. Prices of cement has come down in a small way after June because of the monsoon. The demand is not there. I hope in the peak season it will again we will be able to maintain the right prices.
When you say so, the pricing has come down for the month of June. What's the quantum that you're looking at? And also, if you remember the previous conversations that we've been having, you said that for the financial year you expect usually cement industry undertakes a price hike to an extent of 3 to 4%, but this year this is not going to be possible. So, what's the quantum
No,
of cut?
hmm, I still maintain that 3 to 4% will be the price increase every year. There should not be price increase or price uncertainty is not the factor for performance. Price certainty is there that every year only this much and no more price increase will be there. So prices are a small factor. You have to understand the efficiency with which the modern technology is being harnessed by the cement industry. And the efficiency brings us lowering the of the cost and hence maintaining the margin.
Sure. I mean, in the broader picture, definitely price factor is a smaller piece of it, but it does have, an impact on your overall realization. Also, this is typically one factor that has played out in this quarter where we've seen the realization improvement coming in, but the cost pressure is actually weighing down. With that, I want to understand when you say that there is a correction which has happened for the month of July. Can you please be specific and put out a number to that? And also, could you tell me which region right now has been witnessing maximum pressure?
Cost pressure will be equal almost everywhere. And price is definitely uncertainty. Whatever we want, we have to compete against the other players. We have to compete against the market. It is not a product where we can fix the price or price rise is in our hand. So when you ask how much price you will like to increase, that is a very good question, but unfortunately, life is not like that. We will like to increase the prices, but there are so many pressures. Because if the demand is not there, what you do with the price increase? So we have to sell the full quantity. We have to have a right balance. So the pressure right now is there in the southern region.
Sorry to interrupt you here. My question to you is what is the amount of correction that we are looking at for the month of July? Because your opening remarks said that there has been a softness which has crept in to the prices.
July opening price have come down by 5 to 10 rupees in some markets 2 to 3 rupees. Nowhere price increase is there. But again, they may be short-lived. We just don't know how the prices will move tomorrow. So 5 to 10 rupees or 1 to 2 rupees in Some market 5 to 10 rupees in the south market, 1 to 2 rupees in the north market. This is what we have uh, felt. This is what we have reduced.
Sure. Okay. And you say that you maintain the guidance of 3 to 4% price hike for this entire financial year. Nothing of that will be changed, right?
Right. I still maintain it.
Okay, Mr. Bhangur, I would also want to chat about cost pressure specifically because we've seen some amount of pressure keeping in from the fuel and the freight, which is both way down on the performance. Going forward, do you think these pressures have kind of peaked out right now? And do you expect a further, or do you expect a further margin compression coming in for the upcoming quarters?
No, I think the peak of the pricing is over. Right now, the prices have started falling down. Petcoke prices, for example, have come down from $220 to $190 or so. Future, the international future market is also not very tight. It is within the same range. Similarly, diesel prices have come down. So we think that the maximum pressure about the prices is over. Now the margin contraction is not on the card.
That's something that we were really looking forward to. Also, I'd want to chat about overall capacity expansion plans because the company is the third largest manufacturer of cement, and it plans to scale up the capacity to 60 million ton going forward in 2025, and in the longer term, the plan is to an extent of 80 MT. Now, Mr. Bhangur, with the aggressive expansion plans that have been announced by Ultratech and the foray of Adani, you think you're going to be scaling up the capacity beyond the numbers that you've stated? Are you looking for any inorganic expansions?
Yes, there are too many questions all at a time. First of all, whatever Ultratech is doing or any other company is doing is not going to affect us. Every company has a plan. Somebody says 4 years in advance. We have a policy to announce the capacity only when the work has really started. Only on intent basis, we are not announcing anything. Though naturally, it takes 3 years or so before you can buy the land, get the permissions, and you start the project. So many things are always in the pipeline. At present, we feel that Indian growth story is intact, 7 to 8% growth. That is a little more than the GDP growth will be the future cement demand. So we are bullish on India. Right now, we have two big plants which are coming up. One is Nawalgarh unit in Rajasthan, and the second one is we have just started the Andhra unit in Guntur. So Guntur unit will be over by 2024 March, and this also will be by 24 March. Both will be within the almost same period.
Mr. Bhangur, when you said that you will be open to inorganic expansions, I'd want to understand what is the quantum of capacity that you'd be looking at, which regions, tentative players, because the bid did not go through for Andhra Cement, right? So I'm assuming that South market is something that really interests you. So are we looking at more opportunities in that region?
We are looking throughout India. Now we have a cash pile of more than 5,000 crore. So about 10 million ton capacity also we can take with some loan, or but depending on our preference will be in the central India, but South India will not be a big no. We will be little more careful about purchasing in South. We have to see the right price. But for Central India, we will be little aggressive.
Okay. Any specific company that you're targeting in Central Zone? And any EV per ton that
That
you're
is
looking
too
at?
much of a question. Till a big progress is there, we will not name any company. Right now, this is not the right question at this forum.
Okay, so are you closer to finalizing the deal, if I may ask? And if yes, then when
No,
can we
no,
expect?
no. Right now, no, nothing is in the finalization state. We are little away from any inorganic expense.
Okay, all right. And also, sir, what is the EV per ton that we'd be looking at? You think that would be to a number of 80 to $100 per ton, usually, which is like a prevailing replacement cost overall for the industry?
Uh, 80 to $100. It depends on South India or Central India. As I said, we will be little more defensive in South India. South India has lot of limestone, so there will be continuous pressure in South India. In Central India, limestone is not so much, so any capacity there will have a better long-term impact.
And sir, what about the valuation? What will be the replacement cost of the assets available in that region? Since you say the availability of limestone is not much of a concern in that region.
Hmm. So, I not able to clearly understand what you are asking.
Mr. Bhangur, I'm repeating my question. I hope I'm audible.
Uh, hmm.
Okay, so my question to you is when you say that limestone availability, am I audible, Mr. Bhangur?
Yes, limestone is the basic
I was
material. Without
asking,
that,
what my
cement will.
question to you is, Mr. Bhangur, that what kind of valuations do you see right now being available for assets in central region, given that limestone availability isn't an issue for that region?
Right. Now, $120 will be a reasonable benchmark figure for Central India, but it all depends on the specific assets, how the asset has been created, what is the other advantages. But $120 will be the benchmark number, little bit higher or lower.
Okay. Mr. Bhangur, I'm sure I'm not going to nudge you enough for giving out the name of the company because I'm sure that's a piece of information that you wouldn't be too comfortable disclosing. But at least, can we come to know the capacity that you'd be looking for? Is it going to be a
No, no,
3-4 MTPA capacity that you're looking at in central region?
no, we will not be talking about the acquisition. As I was just said, it is little far from the route now. No, we are not closing anything. We are far away from closure of anything. So it will be a total guesswork. How far we will reach, I will not like to give a wrong impression that it is just coming.
No,
I,
I get it.
we,
So if it's not coming
so
right now,
I will not talk
price
about the inorganic acquisition. I will not talk about the inorganic acquisition. And giving any capacity, there are very few people with that capacity.
when you say that capacity, what is the number are we looking at, sir?
No, I'm not saying. I'm saying we are open for any acquisition in the area, north, and it is a small world. So anything more will not be appropriate.
Okay, Mr. Bangur, one last question that I'm going to squeeze in at least on the inorganic part because I want to understand markets are keen that, what is the third largest cement producer now doing after an aggressive plan coming in from Ultratech after Adani foray of expansion? You think you're going to be doing way beyond your capacity expansion that you have planned? Any change of growth strategy now that you'd be thinking of?
There is no change in growth strategy. It will be remain so as we are thinking. India is a very long-term story with so much population. India has not seen the demand of cement. Demand of cement will almost double from here in 8 years to 9 years. This is what I think. So every commodity company should be prepared to meet the market demand, and Shree Cement will not be funding, not be uh, unprepared. We are preparing ourselves for meeting the future challenges.